Good afternoon and good morning. Thank you for joining us here today for our bi-weekly oils and fats webinar series. I'm joined by our veg oils analyst, Gurman. Gurman, how are you doing today?
Yeah, very good. It was a very busy day, writing the highlights, a lot of stuff to cover, but I managed to finish by the webinar, which I'm happy about.
Yes, absolutely. Definitely a lot to talk about today. We're going to touch on June supply-demand balance, some price drivers, and the energy and biodiesel angle for palm oil. Then we'll look at some Brent oil market updates, some of the Q3 price outlook for palm oil. Also got some soil market updates, as well as crop updates for rapeseed, canola, and sunflower. And then going to wrap things up today talking about coconut oil's reversal and the Q4 price outlook. So to kick things off, let's start with palm oil. Gurman, do you have the supply and demand estimates for June and maybe a little bit of insight on how those are affecting price?
Yeah, so we've done the estimates ourselves and also looked at the third-party estimates. And basically, the expectations are aligned that in June, Malaysian palm oil stocks likely rose by 3 to 5% in that range, with production rising by around 7 to 11% and exports by 14 to 17%. And what's important, of course, to take into account is the overall stock levels in Malaysia, right? Because they are, if we look at the chart, so I just want to put the historical data. I want to put maybe 5 years and switch off production. So as you can see, for that period of time, Malaysian crude palm oil stocks are quite at high levels. Maybe we can do also overall palm oil stocks, not just crude. Let's see if it will work better. Yeah, exactly. Yeah. So as you can see, the stocks, right, compared to the previous years, are quite high levels, and based on the June estimates, they will continue growing. So that was a bit of a pressure and signal for the market. So prices went down a little bit, and additional price pressuring factors were lower Brent crude oil price and some delays with B50 implementation in Indonesia.
Okay. Yeah, it's interesting you touched on the energy side a little bit there. Can we maybe next go to what's happening in the Brent crude market?
Of course. All right. So, yeah, let's just open the September contract. So as you can see, prices closed yesterday just under $72 per barrel, compared to around 74 the same time last week. And the market sees that the vessel flow through the Strait of Hormuz is steadily recovering. And in addition to that, there were some signals from OPEC Plus that the countries will increase the oil production, right? That's a big factor for prices to stand the pressure. And what was also interesting to see that some relatively recent attacks in the Strait of Hormuz, Iran targeting some vessels, didn't cause any spikes in the Brent crude oil futures. So that's because the market is pretty sure that the peace agreement between the US and Iran will be reached eventually, and the negotiations are ongoing, so everything is okay. So the market basically, didn't really factor in those casualties, and the price, continued being under pressure, and that's of course, in turn, impacted veg oils, so it pressured palm oil and also soybean oil. yeah, because the overall Brent reduced by around $2 per barrel since the previous week.
It's certainly been good to see some more traffic going through the Strait of Hormuz there. Keeping with the energy topic, I know a lot of eyes have been on the B50 implementation and some of the delays there. Could you maybe elaborate a little bit more there?
Yeah, exactly. So the Indonesian biofuel rhetorics looks a bit weaker now to the market because of the 3-month transition period that the Indonesian authorities announced. So they basically said that companies, those who sell biofuels or fuel, they need to clear the stocks of B40, so the previous year mixture, or the mixture from the first part of this year, before they start selling B50, right? So that gives this 3-month transition period. There are also some delays in announcing the amount of palm-based diesel that producers must supply to fuel retailers. So some allocation and clarity among the players now. So that means that basically the B50 sales will start only in October-ish, which delays the demand increase, which was anticipated by the market. Yeah, some market participants basically say that this could cap palm oil prices in Q3, taking into account the supply peaks in Malaysia and Indonesia during the summer, right, which the supply peak normally takes place during the summer. Yeah, taking into account that the demand spike will be postponed, put it this way, and also concerns over Indonesian export channeling in 2026 faded, as the government said that this year they will be do more observing rather than taking full control over exports. So this combination basically gives us a less bullish picture for Q3. However, we also don't see it as bearish because we've got Indian festive demand coming, which historically kept prices high in Q3. And El Niño concerns, of course, as we now discuss almost every webinar, preparation for B50, and also, yeah, high biofuel demand, not just in Indonesia, but also in Malaysia and in Thailand. In Thailand, they restricted exports. So basically, these factors, they give a good support also to the prices, which, yeah, in our opinion, will not let prices drop also in Q3, at least too much.
So to kind of summarize there, in your view, the price direction for Q3 is looking sideways to maybe slightly up?
Exactly, yeah, because mainly because of this delay in B50 implementation, and Brent staying, at around $70. The picture looks less bearish as before. Yeah, but still not bullish. Sorry, not as bullish as before, but not bearish to me.
Okay, very interesting. Definitely something to continue to keep an eye on. Moving over to soybean oil, let's talk a little bit more about what prices are doing there.
Of course, let me share my screen. So we are in the future section. I'm just going to go to soybean crude. Yeah, as you can see, if we take the 29th of June value, you can see since then prices actually became lower and hit lowest level on the 1st of June, around 66.31 US cents per LB. However, since then, prices managed to recover partially. But talking about the decline, that was caused mainly by partially by the Brent crude oil decline, as we mentioned previously, but also by some let's call them bearish news associated with the soybean oil usage by the biofuel producers. So basically, the April report by EIA showed that the soybean oil share in the biofuel feedstock mix declined to 37% compared to around 42% on average in the previous month of this year. And that's because very high soybean oil prices. So if you put, I don't know, 1 year even, you can see that they're very high. Caused some, you can say, demand rationing. So basically biofuel producers, they try to switch to some alternative feedstocks such as corn oil or tallow or used cooking oil. You're pretty familiar with those markets, right?
Mhm.
And try to increase the share of those so they can maybe spend a bit less on the feedstock, right? So, and when the report came out, the market reacted to it, and this caused this week over week decline in the CBOT soybean oil price.
Okay. Makes sense. You did mention at the beginning there, though, that there was a strong rebound that happened recently, correct? What?
Exactly, yeah, so we can see it here. Yeah, and if the rebound was driven by soybean, if we look at the soybean chart, you can see that there was quite a jump for in the what's this contract? Yeah, September contract, and that was helped by some news around Chinese buying and some weather concerns around the US. So basically, NOAA forecasts indicate that there will be hotter than normal temperatures across much of the United States during the second half of July, while quite some portions of the Corn Belt, which is very important for soy too, of course, are expected to receive below normal rainfall, which will be important for the because now during the summer, especially July, especially August, even more important. It's an important period for the soybean growth in the United States, and bad weather news they can cause significant volatility, as you can see. So the weather was the first factor, and the second one was, as I said, the Chinese buying. So after the meetings between the U.S. President Trump and Chinese President Xi, during that meeting, they agreed that China would increase the soybean buying. Overall agri buying from the U.S., but including soybeans. But since then, there were not too many big fresh purchases. But finally, some news came that China's state-owned trader COFCO bought at least 300K of US soybeans for September and November, and some estimates pointing even at 600K, which, along with the weather news, helped the soybean prices to increase, which helped in turn soybean oil price to rebound.
Interesting. So my take is definitely that we, in the coming months, will need to watch the oil share in the U.S. biofuels feedstock mix and see if that increases or decreases.
Correct.
Moving on to crops now. How are rapeseed and canola looking?
Yeah, so in terms of the fresh updates, in Canada, farmers planted an all-time high record 23.4 million acres of canola in 2026, so which is a 8% year-over-year increase. And the estimate came above market expectations, which were around 22.8. However, of course, there were some concerns that the heavy rains and flooding across the prairies could reduce harvested area and pressure yields. But overall, I've checked some, let's say, estimates by crop agencies, and the current forecast that the canola crop in Canada will be above the previous season's 21.8 million metric ton, which was already high. So this year, in the coming season, it might be even a little bit higher. So that's about Canada. But in Europe, the situation looks a bit more tight than in North America. So basically, in its June report, European Commission cut its 2026 rapeseed crop projection by around 1 million metric tons, quite a lot. I haven't seen too many agencies doing that, but the European Commission did. And now the crop is expected to be below the current season, which is 20.2 million metric tons. And the European Commission also increased the import demand for the upcoming season for the European Union. And as we discussed a few times in the highlights, this adds to already tight situation in the European Union because of lower beginning stocks. Imports were very low this season. Australian production risks, we should not forget about the El Niño, right? And the next season, basically, trade could be a bit tight because key suppliers to Europe, they are, take for example Ukraine, they might prefer to export rapeseed oil instead of rapeseed as they did this season, right? Then taking it, for example, Australia, they might face a lower crop, and Canada, which is more focusing now on the US market, right? Crushing more canola. As we discussed before, soybean oil is very expensive. US producers looking for alternatives. And because of that, Canadian crush is on the rise of canola. So they export more canola oil to the US rather than canola elsewhere. So that makes the export supply to Europe is a bit tighter in the coming season. And of course, when the EU cuts the production forecast, that looks a little bit concerning for the Europe specifically.
Yeah, absolutely. I think Canadian production is definitely looking better, but that's probably not going to help EU supply too much. Canada is going to crush more for the US biofuel market. Looking over at sunflower oil production, how are the numbers looking over there?
So if we take the seed, sunflower seed, not the oil, basically, next season high global and EU as well. Sunflower production should bring some relief to the tight EU market. As we said, I think in the previous webinar, global production is anticipated to increase by a few million metric tons, which is great for the supply availability, with EU production expected to increase to around 10-ish million metric tons compared to 9-ish in the current season. In terms of the fresh updates, there are good forecasts for largest producers, Russia and Ukraine. So Russia is expected to produce around 19.7 million metric tons compared to 17-ish in the previous season. So over almost a 3 million metric tons increase, which is massive. And the recent revision of 0.7 was done by the local agency. And our partners, APK Inform, shared with us the Ukrainian update. At this point, they anticipate 13.4 million metric tons for Ukraine compared to 10.7 in the previous season. So basically, both countries, Russia and Ukraine, are expected to increase their production by just under 3 million metric tons. So together, let's say 5.5, right, if we just round it up. So which is very big increase. But of course, everybody needs to watch the heat wave, which is now also entering the Ukraine a little bit. So I read the news that Poland now is facing record temperatures, and the Ukraine also is under risk. And APK Inform mentioned that they monitor the weather closely. So last year we anticipated a very good crop initially, but then the weather killed it, right? So we ended up in a completely different situation. That's why the July and August will be very important periods for sunflower growth, and the hot weather is probably a bit of a risk factor there.
Yeah, absolutely. I know weather's been nicer lately, but expecting some quite warm weather. So looks like there is a good crop coming, but we'll have to keep an eye on that. Moving over to the Lauric complex, I've heard coconut oil hit bottom and reversed. Want to give a little bit more insight there?
Of course. Let me go to the platform, and I'll share with you. We'll share on the screen two prices. So first, So this is C for Rotterdam price, right, for September, October, and below I need to find it. All right, and below I've got X-Works Manila price. So as you can see, same direction, basically hitting the bottom and then rebounding, right? And long story short, what I heard from various market participants today in the Southeast Asia, also in Europe, that higher copra prices. Let's go to them, right? We've got here for various regions. So you can see copra with your coconut, out of which you produce coconut oil, rebounded starting mid-June. That's associated with lower availability. So what was the story that around Q2? Yeah, not around, actually in Q2, copra supply increased a lot, which improved exports, coconut oil production, and drove prices much lower. But it looks like that copra availability exhausted a little bit based on the information that I received from the local market participants, which is driving the raw material prices higher. And in addition to that, of course, people watch the incoming, or basically, you can say we're already in it, the typhoon season in the Philippines, which is always a risk factor. El Niño, right? And I think you might have seen the articles that various forecasting agencies, they aligned with each other that there will be a strong El Nino, right? So there are not too many disagreements on that. And of course, it will impact the copra production with a lag, but people already know that the copra production will be lower next year, and they factor this in. And another factor that they watch, of course, is B5 potential increase of the biofuel blending mandate to B5 in the Philippines, which will increase the coconut oil demand. And all these factors, basically, they helped, according, again, to the opinion of the market participants, to form a bottom. Let's see if that confirms later or not. To form a bottom for the coconut and coconut oil prices and drive the rebound. And of course, very important factor to mention, as you can see, maybe this is not the best example because it's X-Works to FOB, but if we add some costs to the X-Works to make it FOB, coconut oil price will still be on par or below crude palm kernel oil price, which, if we look at historical data, of course, normally is not the case. So coconut oil normally holds a premium, and market participants believe that it should change back to normal soon, that coconut oil will build a premium over PKO. So that's basically the information that we collected today. And to be honest with you, it looks reasonable to me. But what's important to understand that coconut oil probably is the most intransparent market out of all that we monitor. So it's always a bit difficult to say if copra supply really improved or deteriorated. But I think the export numbers and the price behavior will confirm this to us in Q3.
Absolutely. So looking at Q4, what do you think the price behavior of the Laurics could be as we near the end of the year?
So I think if we look already at the Q4, both oils, palm kernel oil and coconut oil, might face an upside risk. So for palm kernel oil, it's actually seasonally like that for both oils. So for palm kernel oil, it's driven by lower production in November and December, right? And similar pattern applies to coconut oil because mills normally reduce crushing activity in Q4 because they go on maintenance, which again tends to support the prices. So for example, I'm maybe later I can do that. If you put the seasonality index, right, just checking the statistics over the year, so both of those oils, they normally the prices peak at Q4, which is an upside risk for the buyers. So Q4 looks a bit more clear to me than Q3, right, which is a bit more controversial. And of course, for 2027, if we look beyond Q4, it will be El Nino, right? I hear a bit of a different opinion on when El Nino will actually be visible in production of palm oil, like CPO, PKO, coconut, with the majority of the people saying 2027. Some people say 2027 second part. Some people say 2026 Q4. Some, maybe marginal impact. But apparently, I would say the most tangible reduction should take place in 2027, maybe end of Q3-ish, Q2-ish. So that's something worth watching.
Absolutely. Well, I think those are all the questions I had for you today, German. I appreciate you kind of giving us an update on all of these oil markets. One thing I do want to mention before we wrap up today is Vesper has published our mid-year outlook reports for the different markets, but especially relevant here, our veg oils outlook. So I believe you should be able to read the latest report with the link posted here. If you have any issues, let us know and we'll make sure that the report gets to you. But I don't see any questions in the chat. Anything else you wanted to add, German?
Let me see from my side. Okay, I can see the interaction. Okay, read the latest report. Yeah, indeed. So I think we've covered all the key topics for today. So see everyone in 2 weeks.
Absolutely. Have a good one, German. Take care, everyone.
Thank you. See you. Bye.